everyone, I'm Karunya Rao and we're back with a brand new edition of Ideas for Profit. UltraTech Cement delivered a power-packed performance for Q4 FY21. Now, is it a good time to lap up or should one wait for correction? That's exactly what we're going to analyze today. The company's Q4 revenue growth was ahead of market expectations as well as industry benchmarks. The domestic operations continued its strong growth with cement volumes witnessing a healthy sequential recovery. Moreover, the profitability also improved due to better mix and ongoing cost savings. Standalone revenue increased by 35% YOY to 13,966 crores during the quarter. While UltraTech Cement delivered positive organic revenue growth in all its key geographic markets, the volume growth also came in better than industry peers. Buoyant price trends and rising share of premium products buttressed the top line and margin profile. EBITDA jumped 55% as operational performance benefited from improving cost structure and acquisition-related synergies. The overall capacity utilization for the quarter stood at 93% owing to buoyant demand from rural markets, infrastructure projects and housing segments. Also, the sharp jump in input costs had little impact on its margins owing to operating efficiencies resulting from changes in fuel and energy mix and route optimization. For the full year, the company generated free cash flows in the excess of 4,500 crores, which was mainly used for repaying the debt. At the end of March 2021, the consolidated net debt stood at 6,717 crores. UltraTech is the largest cement manufacturer in the country with a capacity of 111 million tons, and the company aims to increase its capacity by another 20 million tons through a mix of brownfield and greenfield investments. These new capacities are expected to come on stream in a phased manner over the next 2 fiscal years, but there could be some delays in execution due to prevailing market conditions. Partial lockdowns in various states have hurt the construction activity in April 2021 as well. The short-term pressure on volumes is expected to persist owing to incessant spike in COVID cases across multiple markets. However, cement prices continue to hold firm across regions even as rising COVID cases have hit demand. In fact, dealers in the southern markets have hiked prices between 3 to 5% in the month of May. Management sees the second wave of COVID as a temporary blip and expects the second half of FY22 to be better, driven by government spending on infrastructure and pent-up demand for housing projects. Management commentary points to first half of FY22 being pressured by the second wave of the pandemic. Earnings over the next couple of quarters could be bumpy owing to continued headwinds from COVID-19 and accelerating cost inflation. However, UltraTech is a clear market leader in the industry and recent earnings indicate that long-term trajectory of the business remains intact. Across the board, financial performance improved over last year and in many cases even to pre-pandemic levels. The management execution throughout FY21 has been quite remarkable considering the supply chain challenges as well as market disruptions. The stock of UltraTech is up nearly 80% on a one-year basis following the bullish momentum in the cement sector. UltraTech's current stock valuation factors in a lot of optimism, and it does not appear to be pricing in the potential risk of a prolonged downturn in the global and domestic economies. Given the scale of UltraTech Cement, the company definitely has several competitive advantages over its peers, and therefore investors should wait for some price correction to enter the stock with a long-term time horizon.